Hey everybody, this is Grateful Futures here. It is a beautiful Saturday morning. The market is closed. And I wanted to do a nice little video for you guys about probably the most important topic that any trader could ever um, learn. This will improve your day trading or swing trading forever. What I want to talk about today is called the point of control retest. Now, you guys know me if you've seen my videos before. I am primarily a volume-based trader, and I think that that is, the most noble thing to study, as it's literally the basis of why the market is even moving. Now, this is a strategy that's going to be timeless. It's always going to work no matter what, as long as there's volume. This will always work. Uh, Years and years and years later, it always has worked. So let's get right into it. Now, I wanted to show you guys this on a couple different time frames because truly it does not matter what time frame you are on. This is true for any and all time frames. Now, there is a couple volume profiles that I want you guys to consider when trading. And if you guys don't know what a volume profile is, or if you're new to volume analysis, please check out my basics to volume profiles playlist that should pop up on the screen here. But if not, go over to my playlist and check that out before. This video is going to assume that you guys know some of that basic information. Now, the first one I want to go over is the long-term anchored volume profile. So go ahead and take your anchored volume profile, put it, pretty much I like to have it since the previous bear market has ended. Let me pull out my long-term. I like to have it in these colors, and not going to talk a ton about this today, but I've gone over this in other videos. You want to go ahead and mark off the low volume nodes. Those are very important. These, just like I'm doing here on the screen, those become pretty important support and resistance zones. And if you have like a huge gap like this one here, mark that off. That becomes the more or less the long-term supply, demand zones, since it's on the bottom. Okay. Okay, and you can see every time price wicks into that pretty aggressively, comes back up out of it. That's not really what this video is talking about, but it is something that I want you guys to be aware of. Now, I'm going to go ahead and delete these because that's not the topic of this video. That's just one of them that I want you guys to focus on. The other thing about the volume profile that I do want to go over in this video, however, is the point of control. So the point of control, just as a refresher, is the heaviest volume zone of the entire profile. This is where buyers and sellers are both conducting the most business. So more or less when price is within this volume peak, this zone, this price level is going to be the highest transacted price. So this becomes important um, when you actually see it used as a support or resistance. That kind of gives you an indication that price potentially might be done in this zone, at least for the short term. So we'll go over that more in just a second. Just wanted to review what point of control actually is. I'm going to erase that now because what I really want to go over is going to be the fixed range volume profiles today. So a fixed range volume profile is a little different than anchored, where anchored will take all the volume from where you anchor it to the present day. Fixed range volume profile gives you a little bit of freedom to choose where you want to actually see that volume data. So if I click, let's say, from here, this recent low, to, let's say, this high, it will give me just the volume data for that specific segment in time. Now, this is important when you draw these in, pivot points. So from a low to a pivot high, you can see where the volume actually is in this case, and it gives some very, very, very important information about the volume in that zone. So let's go ahead and mark off our point of control. In this case, it's right here. And you can see how perfectly price pulls right back to that level before taking off again. And there's a reason for that, right? It's not magic. I want to discuss that really quickly, but basically you want to have all of these marked off on your chart. If I was going to do this, I would say partial uptrend point of control. So another thing I like to do is you have to consider it's not always a perfect touch, right? Sometimes you will get a perfect touch to the tick, but um, more, traders really understand that this is really a zone. So this, you can see how lots of that point of control is sitting within this volume peak right here. So what I like to do is draw a box over that volume peak and just kind of understand that is the point of control zone. And you can see price pretty much perfectly touches that and then continues the uptrend. So let's talk about the psychology behind why this actually works. I'm going to go ahead and turn off the candles here for a second, just so we can talk about this. So let's just think about this in theory. I'm going to go ahead and get my handy dandy drawing tool out. And down here where the volume is thin, we can say pretty accurately that price did not spend a lot of time there, right? There was very, very little volume that was conducted there. So what this usually results in is price moving quickly. And this little volume peak here, maybe there was a little bit of consolidation, but ultimately price is searching higher. Buyers are buying, not a lot of sellers are selling, right? Price is searching higher for the presence of sellers. So once we start getting into this area, a little more selling is occurring, but ultimately buyers are still outpacing the sellers. Now, once we get into this area, this is where sellers really start, selling in higher quantities. Buyers are still buying, but price is sticking here a lot longer. So you might get something like this, a consolidation, maybe some pullbacks, some pull forwards, um, but ultimately buyers still are going to search higher. Sellers kind of quit selling, seeing prices moving up, even though they were, maybe buyers that were buying down here or right here are now taking their profits in this zone. But ultimately, buyers still outpacing price discovers higher. And at this point, buyers say, hey, maybe this is a bit high of a price. I'm going to stop buying, thinking maybe potentially there's going to be, lower prices in the future. Sellers start seeing that there's a lack of buyers and all these people that bought here or here start to maybe fear that their profits are going to get lost if we have a big crash, and they start to sell. Now, why is price pulling back? Technically it's because we have a lack of buy side liquidity, right? So where can we assume that there's going to be liquidity again? Well, in the area that there was the most liquidity is a pretty fair assessment. So price generally pulls back due to a lack of buy-side liquidity. And then when we get back to a zone of heavy liquidity, buyers start to buy again. And then people now see this and they say, okay, we have our liquidity back. Many, many people will hop on this and continue to discover prices higher. So that is the general theory about why a point of control tests work, because you're looking for an area of recent heavy liquidity, which price could fall back on to resume its current trend. So let's pull back here. We know that this works on a 4 hour. So what you would do, let's say we're right here in time, you see this little hammer candle, price drops down, prices, people are starting to think, hey, maybe we're going to get a pullback. What you can do is take your fixed range volume profile, draw it out from those pivot points, mark that off on your chart and say, hey, if price gets back to here and we start to see buyers kick back in, then I'm going to go ahead and open a swing trade. You can see, look, hey, there's sellers right here down in the volume. But once we touch that, price jumps up, comes back down to test it, and we get this nice little pocket of buyers. We gap up higher. You could even open your swing trade right here. and put your stop loss below that zone, targeting, you could either target the value area high, um, you could target even higher, new highs right below that recent high, but these are the best places to open swing positions when you pull back to a long-term point of control after losing a little bit of liquidity in an uptrend. And this happens all the time, right? Let's go ahead and look at some other situations, see if we can find some other times that this has actually happened. Let's maybe look at a longer term one, right? Look at that, price pulls back down after searching for new highs, touches that point of control, pops back up. Now, ultimately, this did come down to this long-term demand zone, but overall from here to here, that's a ridiculous amount of profit in terms of a swing trade. So you can always be looking at one, these long-term supplies or demand zones, or the point of controls to actually enter off of a pullback from lack of liquidity. So that's the 4 hour chart. That's what I wanted to show you on the 4 hour chart. Now, what the real meat and potatoes of this video is actually going to be on a 30-minute chart. So the next type of volume profile that I want to go over, and in my opinion, this is, probably the most important to day traders. This is something I have not covered before, is the session volume profile. So you want to go over here, you can just type SVP, session volume profile. You want to go ahead and click on that, and something like this should pop up on your chart. Now you do need, I believe, at least the essential trading view to be able to view this, but almost every single broker or charting platform has some kind of ability to look at the session volume profile, whether you're on Thinkorswim, um, really Ninja Trader, all of these have their own versions of the session volume profile. And that's going to give you a volume profile for each individual session. Now, this becomes important, and I think this is most valuable to look at long-term zones on a 30-minute chart. This is going to, let me first start by saying how the settings should be. I like to have it all as one color. I think that's really the only, you don't need to have buy and sell volume, so you can make sure this is total. And then I like to have my row size at 200, otherwise it gets a little blocky if you have it lower. So keep that maybe around 200, and then make sure you have this checked, extend point of control right. So that is going to be super important because that's going to give us what we call virgin points of control. And why is a virgin point of control important? It has a little bit to do with trading psychology, right? Let's say we have one of these that's a virgin point of control. Buyers in an uptrend, they want to make sure that you're always looking for validity, right? When price just rips up, sometimes traders get a little bit, iffy about if this is a valid uptrend. So a lot of the times you're looking for that reassurance. So you're looking for your kind of assurance that price is actually done in that zone and in this where most of the volume was conducted in these zones. Um, so what really works, and for the exact same psychology as what we just went over on the long-term 4 hour chart, you're looking for ideally retests of these points of control. So we do it the exact same way. I'm going to go ahead and maybe do one that's already happened. So let's look at this one. This was a previous virgin point of control. Let's go ahead and just draw our box out on where most of the volume was in that specific peak. I'm going to extend it right. So a little bit more here. And some people do the entire value area. You can do that as well. I like to have it just kind of a little bit tighter if there's like a specific peak that has the point of control in it. Like for example, this one down here, I probably would have done it a little bit wider just because it was so flat and kind of rounded. But the more concentrated the volume peak is, that contains the virgin point of control, the better it is just because it's a little bit of a tighter zone. Um, Anyways, so I would draw out my box on there. I know that that peak is where we had the most volume in that day. And then I'm going to go ahead and put a line for the Virgin point of control, the exact price level that held most of the volume that day. So ideally, we want to see at some point in time price come back down, test that, and act as support. That way, we get a confirmation that transaction is done in this price range. So what happens the next day? We kind of gap up, right? And there's a reason for that. This was a long term. There was actually another Virgin point of control that had been tested, but um, this anyways price gapped up after this day, and we kind of get a little bit of an increase in the value area, then the value area starts to decrease, and we eventually pull back to that virgin point of control. And you can see when price gets to this virgin point of control, you see a lot of wicks forming on it. That's huge indication that, especially off of such a red day, that buyers are now supporting this zone. That's exactly what we want to see. Um, and we can even see price pop up out of this. At this point, if you're a swing trader, you can open up a swing trade when you see price pop up out of this, or even if maybe if you want to do it on this hammer candle, when you see price pop up out of this, you can open up a swing trade, put your stop below the low of that day, and you can target, that previous swing high for a absolute monster gain. So definitely, pull up all of these. It's not always on this long of a time frame either. We could also look at it, from one day to the next. Let's say right here when price is starting to slow down, right? We get a consistent from down here, the value area, and I like to look at this in terms of value area. Value area is moving down, and then value area starts to move up. That's a really good sign, especially if it's off a day that's testing a virgin point of control and you see that value area move up. That is one of your biggest swing indicators. But I want to focus a little bit later. Now value area is moving up, it's moving up, it's moving up, and now this is the first day where it doesn't necessarily move down, but it doesn't move up again. And then the next day, value area moves down, and we get this kind of consolidation. So this is another one that I want you guys to focus on too, is if there's multiple days where the value area and the point of control are pretty similar, this just reinforces that point of control. It's kind of like a double virgin point of control, so to say. So what you should do is you can either take the previous days or this one or an area between them. Sometimes I like to go like this, where I'll just take the volume profile of the whole thing so that the point of control of this consolidation is right here. And then I would maybe call that a double VPOC. So you can see the next day, and I'm going to erase this so we can have a little bit better visibility on our chart. Price opens, it actually, moves down, tests lower in the post market, and then into the pre-market. Buyers try to pull this back up, saying, hey, let's try to get price back to this range to see if we can conduct business. But when price almost perfectly touches that virgin point of control, and then hammer candles down, that is the biggest indication that price is done in this consolidation zone. So when you see something like this, you can tell yourself, hey, price is searching lower. It failed to retake that virgin point of control and started falling. This is kind of one of the only times that I enter the market, on open. But seeing like this, when you see this point of control fail from this consolidation range, this is something that should sound off alarms in your head. You can take this and take it short, put your stop above that virgin point of control, and you have a monster win within the first hour of the day. So let's look at and see if we can just draw some of these points of control and see if we can see any trades based off of them. Let's say if price or if let's say we're starting the market on this day, the previous day is always going to have a virgin point of control. Let's draw it out. Most of the volume was in this general area. This is our virgin point of control. Okay, now we can see prices going down, buyers hold it back up. That also coincides with a high from this day. So that's already showing you, hey, maybe there's some support down here, but we can make a trading plan, right? If price fails here, it could potentially be a short, maybe down to the pre-market, maybe back into this recent value area over here. Or if it breaks through it and reclaims that point of control and retests it, supporting it, then that would say that buyers are okay buying above this area. So let's go ahead and just roll the tape, see what happens, see if we can take a trade off of this. So immediately buyers rip up, okay? Rip up, but you shouldn't just enter a trade just based off that because remember, buyers always want to be sure that this area is done. We could just as easily pull back down, and if we reclaim it, it's fair game for that range. So what we want to do is sit patiently on our hands and wait for price to retrace there. If it does support it, then we can go ahead and take this long. And let's see what happens. Price comes down, pretty much perfectly test this. Now, when you see this kind of action happening here, sellers are selling down aggressively, but buyers are coming in. Where are they coming in? Almost perfectly in our virgin point of control zone. So when you see this, you can definitely try to take a long trade. Try to enter as close as you can to that zone, put your stop below it, and you can maybe target the high of day. And there's a confirming hammer candle with a wick a bit higher, and already within an hour, we got our beautiful, beautiful long trade has hit. So you should always be constantly drawing these. These are what I call the intraday supply and demand zones. Of course, we have our long-term supply and demand zones, but these are our intraday ones, drawing them like this. And let's see if we can find a supply zone. So this is also kind of a double point of control right here. We can draw that out. Let's actually take it using the consolidation. So there's our double virgin point of control. And we can see early in the morning it tests it, can't get back into that range, fails right here. You could take that trade short. So, and for the supply zones, you can use a red color, let's say right here. It's for supply zones, you can use a red color. Demand zones, you can use a green color. If it breaks through it and retests it, change the color to green. And you know that those are kind of those important zones that you can use to look for, exclusive trades off of those points of control. So that's really what I wanted to show you guys there. Another important thing that you can do to, increase the validity of these virgin points of control is use a Fibonacci retracement. So I don't use these all the time, but one I do pay attention to And I'm not going to go over the whole theory of Fibonacci zones. If you're a trader, you've probably heard of it. As long as it is somewhere around the zero point 0.5 retracement, so whatever this chunk of uptrend here was, traders are generally looking for price to pull back down 50% of that run before um, coming into the market again. If your virgin point of control is around that 50% mark, that increases the strength of it immensely. So we can look and see if this has happened a number of times. Let's look at that one, pretty much perfect. Let's look at this one. So from the bottom of this to the top of the trend, the 50% mark is right here. Look at this point of this virgin point of control is within that range of 50%. Price tests it, pretty much comes down to the 50% retracement perfectly before making another attempt at highs. So that's what I want to show you guys. Look at these trends, look at the virgin points of control, see which ones are close to 50%. It doesn't always have to, that's, kind of more for swing trades, doesn't always have to be perfect, but if it's in that range of 50%, and you see buyers come out of that virgin point of control, then it's a very, very strong indication that price is ready to move up. Now, let's go ahead and look at another one that wasn't necessarily a 50%. Let's see. This one right here is kind of close actually to 50%. So our 50% mark on this is right here. So that is technically within the range of 50%, but let's see if we can see anything else. If we pull up our long-term fixed range volume profile of here to, let's say here, where is our long-term point of control for this uptrend chunk right here? So that is another thing that gives additional weight to these zones. Let's make that 4, maybe make it a dashed line. So this is our largest liquidity pool in this section of uptrend. So when price pulls back, additionally, that is something else that is providing potential liquidity there, right? So there's a long-term liquidity zone right here. There's also, so you see when price is falling out of this, kind of, buyers start coming in around that zone. It was also a previous double point of control, so that's also something. I don't leave these up all the time, but if it was kind of an important one in the past, you can. So there's a long-term liquidity zone here. There was a previous point of control there. Price pulls back. You see buyers supporting that. Then the next day, what happens? Let's go ahead and mark our zone for the previous day. Let's make that green. This one should technically be green too, since we're above that price now. I'll just erase this one because that technically was the day before, but buyers came off of that long-term point of control. They're now pressing up price, and oh yeah, this was an interesting one because this was also a virgin point of control from this day too. Let's just draw this out and see what happened on a lower time frame. So if we are, let's make a replay from right here. This is what the chart looked like the other morning. We would draw our virgin point of control in this zone, a little higher. And I think this is kind of a similar peak. Also, I think on a 5-minute chart, 15-minute chart, this was actually the point of control. But for simplicity, I'll use the one on the 30-minute chart. It's a VPOC. Okay, so, and then this was our point of control from the previous day. Let's go ahead and mark that as well. So, just gonna make this one red. Okay. All right, so as we start the market this morning, we have a pullback that pulled back to our long-term point of control for the previous uptrend. Erase some of this stuff to make the visibility a little more clear. We can make kind of a plan based on this, right? So technically this one was tested in pre-market, so that's good. It can always come back down to it. There's a potential for this to break this point of control like it looks like it's already doing, test it from the top, and we might be off to the races. But if it does fail through here, fail back down from testing this point of control right here from this day where we moved up and then failed down, leaving this point of control out there. So if we fail that, most likely the next spot where it's going to be caught is that virgin point of control from the previous day. So that's a potential to come back up to this zone. And then, if we do potentially break through this, it'd probably come back down to that long-term point of control that we just drew out earlier. So that's kind of your pre-market plan for the day. Let's actually see what happened, but let's zoom in on a 2-minute chart so we can kind of move into our next topic. So we have those two same zones. Erase those so you can see price opened kind of wicking down off of this virgin point of control. Price came down, tested it almost perfectly, and started falling. You could take a short position here and try to target below that or a little above that virgin point of control that showed support in the morning. Or what you can also do is just wait for this point of control since we know that we're falling to a spot of heavy liquidity and buyers have showed that they're ready to hold the price here. Now you could take that trade. You could also take a trade just kind of waiting to see what happens when this zone is tested. So we already know there's a lot of buyers down here that it's kind of stopping price from falling. We get this really, really nice hammer candle right here, and you can take a long off of this point of control, setting your stop below, targeting below that zone, and then we actually get a break through it. Price comes back to test this zone, holds, moves up. You could also take a long out of that zone as well. I would prefer the first two trades because they're a little more solid, right? These have these solid virgin points of control that we've marked off from our previous days. So I'd prefer these two trades. Maybe you can leave a runner. Um, that is how you use those long-term or the session volume profile, excuse me, to make a trading plan based on these intraday supply and demand zones. Now, the other thing that I want to talk about is even a shorter time frame, right? Let's maybe you're a scalper, maybe you don't want to take these long trades. What we can also do is look at this on a shorter time frame, right? This is valid on any time frame whatsoever. So let's see if we can do that. So price comes down, you should already know that there's that zone there. So there's, if price does move up out of it, potentially it's going to test that zone that we just drew up there. But let's see if we can even find another place that we can take a position here. So just kind of understanding how price moves. So let's look at the volume profile of this specific up chunk of uptrend. So um, price moves up, posts a ton of volume up here, right? So there's of this uptrend, most of the transactions have taken place up here. However, runs out of a little bit of liquidity and pulls back. Let's look at what would actually happen here, right? So we know most of the volume is up here. Let's go ahead and just kind of draw our zone right there. And then if it falls back, what volume is down there to catch it? And we could even draw another one just to have a little bit more information. Let's draw maybe right here. So what is going to catch it? So up until this point, you can even draw all the volume up until this point. Most of the volume that day has been posted right here. We can draw our same thing we've been doing. Let's just make it green. Put our points of control in there. So if we run out of liquidity here, what's the next thing that's going to kind of hold it up? It's going to be where most of the volume was there that morning. So we can make another plan, right? If price pulls back down here and then catches buys, we could go long up until that volume area up here. If price breaks through it and retests it failing, we could take it to low of day. But ultimately, we see price is going to come up out of this zone. Another thing we can look at is, like I said before, where's the 50% mark? Look how perfectly it comes down to that point of control on the 50% mark and pops. So that is kind of what I wanted to show you. Let's see if we can just look at a couple other situations before I end the video, but I've shown you guys pretty much everything that I wanted to show you guys for this video. Let's look at maybe this day. Let's get some of this other junk out of there. So this day, starting here, price kind of consolidated in the morning. Let's look and see if we can see the kind of for that consolidation period. So price consolidating, going up and down the point of control, up and down the point of control. You now see this point of control here is being supported. There's this um, nice little hammer candle coming off of there into this little bull flag with another hammer candle. We see that that price has supported the point of control and then moves up out of there. This is kind of close to all-time highs, so I don't know if I would have taken this as just kind of going over the theory, but you could take a long trade here and just kind of, have a runner. But what I want you guys to see even better is that this is now its own uptrend, right? So let's go ahead and take a volume profile of this piece right here. So the value areas kind of moved up a little bit. Price is testing higher out of this morning zone, right? So can we see another area where potentially, if we run out of liquidity, where would we fail from? Well, most of the volume up here has been contracted in this volume area, and this is the point of control. So price is testing higher, can't make a new high, breaks, makes a new low right here. Buyers try to reclaim this heavy volume area, but we get this bearish, um, inverse hammer candle right here. This is an area where, hey, you can conclude that price is done conducting business in this volume peak. You could take a short off here. This is the only time that I really say you guys can trade against the market structure is when you have most of the volume in the bottom of the day, so up until this point. Where has most of the volume been? It's been down here with the point of control of the session right here. So let's make this red now because we've moved below it. If sellers come in at this area, that's saying, hey, price is done conducting business in this area. Where is the next logical place that we could look for support? Is going to be down here where there was more heavy volume down here. So you could take a short trade here, put your stop above this zone, because if it breaks above it, then that's not good. That's saying price is good staying here. And price is going to come down and down and down. And you could either take this trade to VWAP, but you could also, if you have this up and you know this, you know that price is probably going to retrace to that point of control. And look, most people right here are thinking, I'm longing, I'm longing. There's buyers buying here. There's buyers buying here. There's buyers buying here. Buyers buying here. Buyers buying here. Buyers buying here, thinking that we're going to go in to make new highs. But when this volume zone that was previously, for this piece of uptrend where most of the volume was taking place, when that has failed, now these people are going to start losing profit. These people are going to start losing profit. These people are going to start losing profit. And it makes a cascade of selling that people are now saying, maybe this is coming back down to where prices were conducting business before in this volume peak. And where do buyers pick it back up again? Right here. And now in this case, it's potential that we're going to go ahead and make new highs, but um, you can see that price when it moves up, can it get outside of this morning volume area? And that morning volume area is more or less right here. Where does price get to when it starts creeping up into the outer part of this volume peak? Sellers immediately sell it back down. That is another confirmation that, hey, price is done. It can't make new highs outside of this area. Logically, if buyers aren't willing to buy up outside of this morning zone, then sellers are going to take it back down to where there were more buyers down here. Now, you don't, I wouldn't short this, even though that's a logical conclusion, because where are there logically buyers going to come in this area right here, like we said before, like they just came in right here. Um, so what you can do is you can wait, and let's make another plan. Wait for price to come down here. If it bounces, then great. That would probably be a double bottom. Um, already buyers have shown they're unwilling up here, so you could only, if it does bounce, take the trade up to about here or so, where there was evidence of sellers. Or we could wait to see if this zone cracks, because now we're making kind of a head and shoulders pattern. If this zone cracks and is retested, then this is going to be a pretty heavy short going into the end of the day, saying that, hey, not only are buyers done up here, but now buyers are done in the morning zone too. So that's evidence that this is going to come down, and you can see that does exactly that. Buyers try to retake this zone, start to fail. You see a ton of wicks up here, lots of sell side absorption. And if you trade this late in the day, I don't, you could um, take this trade down short, maybe to yesterday's range or yesterday's value area. It ends up being a crazy fail just because I think of that head and shoulders pattern. This was all-time highs. Prices are showing that they're failing going higher. But that is pretty much how you want to use these point of controls, whether you're a swing trader, a day trader. It doesn't matter what time frame you're on, as long as you're considering the correct time frame for um, your preferred trade. Uh, this is something that's valuable to look at on any time frame. Knowing these zones puts you at significant advantage. You don't want to be the guy that's longing here into an area that is now showing that it is not ready to hold or not ready to go higher. Instead, you can see that you can be on the front end of this trade, knowing that once you get to this point here, that it's safe to say it's going to come back down here. So that is what I wanted to show you guys. I hope you guys got some value out of this video. You know, Professional traders, they consider volume. There's not many professional traders that don't consider volume. If there are any at all, they have some other significant edge, but you guys need to be looking at these zones. Once you do that, you'll be able to see a little bit deeper into the market, understand what's actually happening versus just going with the momentum, and hope that this gives you guys a significant edge going forward. Go ahead and draw these out on your own time. See if you can see what I see. Hope you guys enjoyed this video, and as always, happy trading.